G'day guys, welcome back to another update for high-grade copper and US crude. Now copper has risen, but it's a cautious rise. We've got a divergence in play and US crude has broken through that support level. Before we go any further, make sure you hit that like and subscribe button to support the channel. In terms of the outlook for US crude, prices have declined to their lowest since September, influenced by new US tariffs and plans by major producers to increase output. The EIA forecasts lower oil prices in 2025 amid significant market uncertainties. High-grade copper. Recent US tariffs on copper imports have led to increased domestic prices, benefiting companies like Freeport-McMoRan. Analysts anticipate a tightening copper market in 2025 due to supply constraints and rising demand from green energy projects. So first we look at the long-term trends, and on the monthly you can see there for a couple of months now it's been bullish above the CCI 150, and likewise the price has been above that moving average now for a number of months since early 2024. With the exception of that dip, as shown by that CCI pulling down. Now, on these moving averages, by the way, are available in the description below if you want to learn how to draw them on your charts. On the weekly, we're also in a bullish momentum with the CCI broken above its moving averages, and likewise the price, and there's no sign of any divergence yet or any pullback on the weekly. And on the daily, it did hit this resistance up here at 48,790. It's coming close to that again. We've had a nice big bull run yesterday, and the CCI broken up through that moving average range. So bullish momentum at the moment, although notice there's a bit of a red candle currently forming as we record. Now if we go to the intraday charts, we always look at the smaller time frame as well, see if there's any anything in play which we've got to be aware of. Now if you're expecting it to go long, that's still a possibility with the daily, but notice on the hourly, we've got a bearish divergence, lower highs on the CCI, and that's actually broken to the downside, giving us a bearish signal on the CCI. The price is stabilized and pretty much drifting sideways. So there's lower highs on the CCI versus higher highs on the price, as I always say. And if this continues to the downside and the CCI keeps dropping, we're going to see this drop and a minimum pullback. The minimum retrace we can expect, if we take it back to that significant low, will be this 38% target range of the Fibonacci. That's a minimum pullback. You can actually sometimes just touch that and bounce again, or it can actually fall a lot further. And if it falls much further than that 61%, that's a key area to look out for, which we may see further declines from there. But at the moment, one step at a time, a bearish potential outlook if it breaks down into this 38% Fibonacci range. So for US crude, we've got the opposite. A bearish outlook at the moment. On the monthly, it's below that moving average of the price chart, and likewise a fresh breakout to the downside on the CCI as well. So bearish momentum at the moment on crude oil for the month. On the weekly, likewise, both the price and the CCI have broken below those moving averages, giving us a bearish outlook. It was bullish there for a few weeks. And again, the strategy is you trade on the direction of the higher time frame. So if you're trading on the daily, we look at the weekly. So at the moment, bearish momentum on the weekly and monthly, but also the daily. So on the daily, you can see there it's been below that moving average range for most of that period since late January. You can see there are a couple of breaks or false breaks, if you like, above the moving average range of the CCI. But again, I'd like to see that break a lot higher on the price as well, and the moving averages to turn up to be more bullish. But at the moment, very bearish, and it's actually broken through this support at 66.54. So I'm going to remove that. And at the moment, there's no sign of a pullback yet. So what we do is we look at the intraday chart as well. So at the moment, bearish on the price and the CCI on the daily. And if we go to the intraday chart, what we look at is taking short trades only. And the last trade you would have taken would have been this period back here when the CCI broke below the moving average range, and so did the price. So you would have taken a short position there, and you close it out when the CCI breaks into that moving average range. So you close it out at the close of that candle. So that would have returned 1.49% in 9 hours of trade. Now at the moment, the CCI is in that, it's broken above the moving averages. The price is stabilized and pretty much consolidating, hasn't broken above its moving averages yet, but still predominantly bearish according to the daily. So only short trades to be taken, don't take long trades. So I'll wait for further downside potentially to open up a short position if that happens in the coming hours. To support the channel, hit that like and subscribe button, and for added benefits and for a cost of a coffee each month, consider subscribing to the Patreon page where we look at weekly scans of bullish shares across various regions Thanks for watching and see you in next week's video.